Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, January 3rd, and kind of a light day today, so we'll just jump right into it. We got the ADP employment number for December, and back in October or November, we had 148,000 new jobs created according to ADP numbers, and they thought that number would kind of keep in. The forecast shows for 149 for December, and it jumped up to 215. So some pretty big numbers in there. But when you break it down, it kind of shows that most of those jobs are been created look like to be more construction oriented. So a lot of that could be towards Hurricane Sandy, the cleanup of Hurricane Sandy, to try and meet up the demand, obviously to repair the damage that was created. So that could be taken with a grain of salt. It remains to be seen. And then the next one, of course, is our weekly jobless claims. We had 360,000 jobs, people applying for unemployment last week. That was actually revised higher. It was about 350 last week, and it was revised higher. And then, so they figured it would be about the same for this week, and it jumped up to 372. So that's another higher improvement. Now, if you've been following me, I've kind of mentioned that to be cautious with the job numbers back around November, December, primarily because when you get these new jobs, like there's less reporting and more jobs being created, part of that is temporary jobs. People are coming off the market, or people are just simply going to give up for the holiday season and then try to get back onto it later on. So now you can probably see a more influx of people going back to unemployment because maybe they were working for retail shops for the holiday season, or maybe they just stopped applying for it. So you may see that this month here, the increase of jobless claims and a higher unemployment rate and such. So speaking of such, those numbers will be coming out tomorrow. That would be the biggie this week. So that could be a very big volatile market tomorrow. So with the jobs numbers due to come out. So let's go ahead and jump over to the headline news. So basically, the only thing we got is the stock market. It's a little mixed. The Dow is down slightly, not by much, while the Nasdaq and S&P were up a little bit. So not a lot of market movers. I think they're probably waiting more for tomorrow, especially when we had kind of conflicting information with the jobs numbers, with the ADP showing increase of jobs, where unemployment is showing increase as well. So it's kind of give or take there. So let's see how this is playing out in the bond market. And right now, the bond market is down a little bit. We started the day up higher, but now we're down about 6 basis points. So we're down about 3 overall from where we left off yesterday. As we've seen, we've touched this threshold. We've touched this several times, this area here, and come back here. So this is going to be a pretty strong support for us right here. So we got to be very cautious. Jobs numbers could either break us out of this, or it could break us down further. So we could potentially go down to the 104.20 if we have good jobs numbers. Now, with the ADP coming out yesterday, to be prepared, with the ADP coming out with the numbers today at about 250, and the jobs numbers tomorrow are right around the 150 as a forecast. Now, they could raise that. Now, if jobs numbers come in slightly above that, it won't be any surprise. But if it comes in higher, like the 215 range, they could have a nice market rally in the equity market and take money out from the bonds, and we could have a worsening of the rate. So we could probably easily hit down the 104.20 range here. But if it comes in under 150 range, then we could have a nice rally in the bond market. Equities will probably pull that money from equities. They'll probably have a retreat in their gains that they've been receiving this week going into the bond market. We could potentially come out of this here. So be cautious tomorrow. Tomorrow could be one way or the other. So as of right now, rates are about the same as where we left off yesterday, as we're about the 104.63 level on the Fannie Mae coupon versus 104.66. So it's only a difference about 3 basis points on there. So really no change in the market right there. And as we can see right now, we're resting on the 10-day moving average. We got the floors here and the ceiling. So we might stay here until tomorrow. And as we 10-day moving average up here, we got, again, kind of puts us more pressure as to which direction we're going to go, as we don't got a whole lot of room here. All right, folks, thanks for stopping by. Hope you guys have a wonderful day. We will see you guys tomorrow. If you'd like to receive these videos on a daily basis, just stop by mikesdailymarketreport.com. And you can subscribe in the upper right hand corner, and we will have these emailed to you on every morning. Have a wonderful day.